This is the Southeast Michigan market update through the first half of 2015, and we were pleasantly surprised at the market. We were really anticipating the market to settle the first half of this year, and it actually did the opposite. It really took off, which was amazing. But if you look at some of the underlying economic conditions that affect the entire country, not just Southeast Michigan, but certainly gas prices declining, wages going up in some segments of the market, particularly in the segment that tends to be the home buying segment, gives consumers confidence, gives them buying power, and that's being released in a lot of areas. I think furniture purchases have been up 6% last year. They were up 6% so far this year. So that gives you an idea of the spending is shifting from daily needs to more capital spending. And we've been seeing that for the last 3 years in the housing recovery. But, and we expected, quite frankly, that it would be settling by now. But there really seems to be more pent-up demand and certainly pent-up supply, actually, in the marketplace. If you look at Southeast Michigan, you'll see that sales are up this year over last year, and they're up mainly in the segments of 150,000 and above. So the lower price segments, sales are actually down about 5%. That's not surprising because inventory is shrinking, still shrinking in that segment, so it's really just tough for people to find houses. So what's happening, quite frankly, is those people who can afford to move up a little bit in the home purchase ability, they're actually doing that, since that's where the inventory is a little more plentiful. And in fact, in all the segments, pricing segments above 150,000, 150 to 250 to 500 and above, all of those segments, inventories have been rising throughout the year for Southeast Michigan. But so have sales. But the difference is that new properties coming on the market faster than sales. So actually for many sellers, particularly the higher price up you go on the ladder, many sellers will tell you that the market feels slower. Many of our sales associates tell us that the market feels slower, even though there are more sales this year than last. It's because you're spreading those sales out over a wider base of listings. What's that has done to the market is that appreciation rates have started to settle a little bit. They're not quite as wild as they were last year, which is healthy. They were too active last year in most segments. In fact, in the upper end segment, we're seeing even the $1 million plus segment, values we're seeing decline slightly, have been declining for most of the year. That isn't a long-term trend. We don't expect values to decline. We said this the last couple months, and we still believe it's true. We think this is more of a temporary adjustment to an increase in supply. That supply increase, particularly in the upper end where it's a pretty thin market, there aren't that many listings available. As that shrinks a little bit, as inventory shrinks, then you'll see that come back to play and values will start to rise back up again. But overall, for Southeast Michigan, we're very pleased with the activity, surprisingly pleased with it. Still anticipate fall to be more of a normaling of the market as inventories continue to rise. And although we think maybe if it was bold to go out to 2016, we still think that'll be a good market. Probably, as we said this year, settling more than in 2015, 16 to 15. Interest rates will rise. That will affect that as values continue to rise. Those two combination of rising interest rates and rising values does squeeze housing affordability. So it will take some buyers out of the market. On the other hand, there still is some demand. There still are sellers who have been waiting for 8 years to sell, looking for the opportunity that will still be released in the market. So all that says is that although the market might be slowing, I think that we're more likely to be in for the surprises like we saw the first half of this year. It's more likely to be a positive surprise than a negative surprise in the market. One other piece of good news, by the way, is that the change in transactions that was called the TRID change, which is a change in the closing documents and the disclosures for mortgages, has been delayed to October. We had talked about the last couple of months. The good news is that's pushed out a little ways, a little slower time in the market, so we think the impact on sellers and buyers won't be as great. We'll have a couple more months to get ready for it. So although it's something to get ready for in October, and you will probably remind you in September about the upcoming changes, it probably won't be as significant as we thought it was going to be. Overall, good market, good news, and on to the rest of the year. Thanks.